button.
Okay, perfect. Well, thank you for the invitation. A pleasure to be here in Berlin today. My name is Francesco Bova, and today I'm going to talk a little bit about quantum economic advantage. Just a little bit of my background here. As was mentioned, an associate professor at the Rotman School of Management. I'm also the chief quantum economist and the former academic lead for CDL Toronto in general, but for our quantum stream in particular. And so I think CDL Quantum is the oldest accelerator or incubator of its kind that's looked at the commercialization of quantum technology, I think, in the world. So we're now heading into our 8th year, right? So as we heard from this panel, quantum is still a nascent technology today. You can imagine what it looked like 8 years ago when we were trying to commercialize it. So we've had, I think, about 140 companies come through the program. At one point, we accounted for about roughly 20% of all global quantum startups had come through CDL at one point in our history. So we've had a material impact on building the ecosystem. And then I also actively write about the economics of quantum computing. And so if you think about like quantum computing being like a very nascent science, writing about the economics of quantum computing is even more nascent, right? There's a very small handful of us in the microeconomic literature that are working on this. Here's a couple of our publications. And so today I'll reference a bit of this, and I'll talk a little bit about our journey looking at the commercialization of deep tech quantum startups. So first I'm going to talk about quantum economic advantage, and that's just, will quantum computers still be economically useful if we can't find a commercial application that makes use of an exponential speedup, right? Where essentially a quantum computer can do something that a classical computer can't do. So I have that question first. And the second one, we'll try to assess how application-based companies that aren't necessarily quantum companies, right? These are companies that are with domain expertise in something that's a little bit orthogonal to quantum, how they're able to create value, maybe even in the short term, working in this NISQ era of quantum computers, right? And so is that possible? And we'll take a look at a case study there. And if I have time at the end, maybe I'll give just some tips for those of you who are looking at commercializing quantum, maybe looking at a startup coming out of the lab, just based on some of our experience if we have time. Not sure that we will. Okay, so just very high level, and something that everybody knows, quantum is conjectured to have an algorithmic speedup for certain problems in a couple of areas. Of course, kind of what we're all looking for is kind of an exponential speedup. And so if you think about this from an economic perspective, right? And so if you modeled an economy with a quantum computer and a classical computer, you had a duopoly, and the quantum computer could exhibit an exponential speedup over its classical counterpart, the quantum computer would essentially be a monopolist, right? They're offering, for all intents and purposes, they could provide a solution in a way that a classical computer could not, right? So they'd be the monopolist. So this is what we're looking for, right? This is something that's going to be venture backable potentially. This would illustrate the economic usefulness of quantum computers. Fortunately, we don't have many applications here yet, right? There's some conjectured applications. It's not clear that we have any. I guess one clear-cut application would be decryption. Is decryption a commercial application of quantum computing? It is not, right? Because decryption is illegal, right? We should not, in the Alice and Bob models, we should never be the adversary intercepting messages and decrypt. So that's not a commercial application. That's not a venture-backable business. That's not. So again, we really don't. It's not clear what the commercial applications are that make use of an exponential speedup. How about more moderate speedups, right? So, for example, with quadratic speedups or an optimization, I know that's been a frequent theme throughout the conference here so far. There are many applications, right? And so if you think about the classical traveling salesman problem, you just imagine it from an economic perspective, easy to see the value proposition. We've got one city, salesperson's got to travel to a bunch of other cities, end up in the city they started in. The value proposition is you'll generate the same revenue no matter what path you take, but you'll minimize your travel costs if you take the shortest path, and you'll maximize profitability. Tons of optimization, discrete optimization problems like this, right? Here, the speed up is potentially more modest, right? There's a quadratic speed up that's conjectured via Grovers, but a lot of potential applications in unstructured search. And so this was the focus of our economic theoretical paper, where we tried to model an economy with a classical computer and a quantum computer. So quantum advantage, which we define as an exponential speedup, is great, but it may not be valuable at all if there's no market for it. So if you take a look at a lot of the claims for quantum advantage right now, a lot of them are exhibiting exponential speedups or claims of exponential speedups in the solutions for kind of esoteric math problems with no commercial value. And they're great. They're important, like to move the science forward, It's important to illustrate that we can do this. A company like Xanadu in Toronto were able to illustrate this. This is featured in Nature. On the back of that result, they were able to raise about $100 million, valuing the company at $1 billion, right? So it's important. But again, being a monopolist in a market, that is solving a problem that nobody really cares about from a commercial perspective is maybe not valuable. Right? Conversely, quantum computers might still be economically useful with more modest speedups in those settings where the timeliness of the solution is really important. Right? So like in venture capital speak, what pain point are you solving for a stakeholder in the economy? And if timeliness, like if you could get the same solution with both quantum and classical, but in quantum, you can do it in a couple seconds. In classical, maybe it takes an hour to get it done. That still might be very valuable, for example, in the areas of, let's say in finance and portfolio optimization. This is a frequent vertical that's mentioned for quantum. You've got large discrete optimization problems, a large number of assets, a large number of discrete time periods over which trading can occur. You can't use calculus to solve this because the variables aren't continuous. So again, let's just conjecture. If a quantum approach could solve this problem in a couple of seconds, and let's say it takes half an hour for a classical approach to come up with the same solution, that is still going to be valuable in this setting because markets are dynamic, right? And the inputs to the problem, right, because the stock market is dynamic, the vector of inputs is constantly changing. If it takes us half an hour to get a solution, by the time we get that output, the solution is stale. It's not useful anymore. Right? And so this is also, despite a more modest speed up in this case, quantum is still economically useful. And again, if you had a duopoly of a quantum and a classical competitor competing, the quantum provider is still the monopolist because the classical provider can't provide a solution in a quick enough time frame. Okay, so there's other examples too. We've had companies, so again, we've had many companies look at the finance vertical that have come through CDL. We've had others look at advanced manufacturing as well. And so there's another area where the timeliness of solution is very important, right? If you look at chip manufacturing, the cost to downtime is about $20,000 a minute, right? And if I have to do an exhaustive search through, again, it's advanced manufacturing, not simple manufacturing, implying a lot of steps. If I have to do an exhaustive search of an innumerate number of possibilities to figure out what went wrong with the process, if I can solve that, in a couple of seconds as opposed to even, 10 minutes, that is a valuable problem to solve there, okay? And so we've also done a follow-up write-up. This is the MIT Sloan Management Review. We've got kind of how dramatic the speed up is on the x-axis, how commercially valuable the problem is on the y. And again, if there's no speed up, right? If quantum and classical can output the same solution in the same amount of time, we should be using classical. Right? This is just like, and so that's interesting. What I'll say is in the last 7 years of working in CDL, what's been interesting is there's been an evolution in quantum. But there's also been an evolution in like quantum-inspired approaches that can be run on classical hardware, right? Like we've found speed-ups in classical, right? That have, if not mitigating completely the quantum advantage in some cases, at least mitigated that potential speed-up. Of course, we would love to find commercial applications with large exponential speed-ups. Right now we're solving a lot of esoteric math problems. I guess decryption is one of them. I'm not sure I would call that a commercial application. That's not an opportunity, that's the threat of quantum computing. And of course, we're doing a lot to kind of respond to that threat. There's a lot going on in the middle though, right? So kind of more moderate speedups where there are a lot of potential applications, right? Especially in the area of discrete optimization. And again, in those settings where, kind of the pain point that you're solving for a stakeholder is time to solution, right? So settings where the inputs to the problem are dynamic and keep changing very quickly, or settings where like the opportunity cost to downtime is very expensive, then quantum might still be economically useful. So this is a general takeaway from this literature is we may not need an exponential speed up for quantum to still be economically useful. Okay, and so let me also kind of give you a bit of a case study here of a company that is one of many companies that have come through CDL that are domain experts in a domain that is not quantum, right? Or it's quantum adjacent, and are looking to experiment with quantum computing to see if they can make inroads into solving some of the intractable problems that they have to deal with. And it's in the area of materials science. And of course, this is one of the verticals where we think quantum might play a significant role. The case studies of a company called OTI Lumionics. OTI Lumionics is a 2-time alumnus from the lab. They were in our initial cohort in quantum back 8 years ago. and then had graduated previously in one of our other domains. So a little bit, the company is a bit more mature than most of our companies. Most of our companies tend to be pre-revenue, really seed stage sorts of companies. So a little bit more mature, and they work in the materials discovery space for OLED screens, right? And so like, a TV screen, an LCD screen, a plasma screen, one of the inputs of the materials that goes into those screens. Okay, so let me dial it back a little bit with the time we have left here. Of course, there's a lot of luck and serendipity in scientific discovery, right? And this is probably why many of us became scientists in the first place, right? And so serendipity is like, I'm looking at solving phenomenon X, but I inadvertently discover phenomenon Y, right? And so for example, I think the discovery of microwaves was discovered accidentally. The pasteurization process was another one that was kind of discovered accidentally. In kind of corporate science, I think the classic case is the 3M Post-it note, right? I think 3M was trying to make a really strong adhesive and inadvertently made a very weak one, but one that could be reusable, created the Post-it note, and created a market for things that we didn't know we needed, right? So serendipity is wonderful in science. We love serendipity. That's when you really have an epiphany, right? When you kind of discover something that maybe you didn't expect. From an efficiency perspective, though, that's not a very efficient form of R&D, right? So imagine if all the blockbuster drugs we discovered were discovered through serendipity, right? Like we found like a random piece of, I don't know, material or something on a deserted island. We figured out its properties. We got it through the regulatory process. It would take decades to come up with new blockbuster drugs, right? So again, we don't really discover things by luck and serendipity, at least in materials, as much anymore. Of course, it still plays a role. We have now segged a little bit. We then segged a little bit just to synthesizing molecules in the lab, looking at the ensuing properties of the molecules and seeing if we could commercialize those molecules. And of course, now we've taken a step even further, which is computational chemistry. Okay, so we're looking at simulating what a molecule looks like in its lowest energy state with computational chemistry. If we do that, we can maybe generate some priors about the ensuing properties of that molecule. And this should funnel down, or this should pare down the funnel of prospective molecules that we need to synthesize in the lab, right? So this is a much more efficient form of R&D than just finding matter randomly and trying to commercialize it or even synthesizing in the lab before we use computational chemistry. Okay, so let me go to OTI. This is one of their products here. Again, this is an alumnus of our lab. So this is a conductor. This is a product you might find in a screen. And so they entered the CDL program as a more mature company. Again, not necessarily experts in quantum at that point in time. And the question is, why would they want to come into kind of an incubator program that looks at quantum, right? And so, and for those of you, I see some nodding here as we're talking about materials discovery. Here's potentially the promise for quantum, right? So again, if you're going to use computational chemistry, you want to simulate what the molecule looks like in its lowest energy state. For a company like OTI, certain properties like vapor pressure, crystallinity, right? It's got to be able to transmit light is going to be important. And the hope is that if you can simulate the molecule accurately, you can generate some insights about the priors with respect to the properties. Now, much like the traveling salesperson problem, simulating a molecule in its lowest energy state is a problem that grows exponentially larger with the size of the molecule, right? Because you've got to take into account all of the interactions between the electrons, which repel each other, the protons and electrons, which attract each other, all the other subatomic particles. This is an intractable problem to solve, in particular as the molecule gets larger. And there's a hope that we can speed up this process by taking a quantum approach. And so that was the motivation for entering into the program. And so around this time, I think this was about 2017, IBM had just completed its simulation of beryllium hydride. Right, comparatively small molecule. I'm not a chemist, but I think hydrogen is first on the periodic table. Beryllium, I think, is number 4. Not a lot of subatomic material, matter in that particular molecule. They measured it with noise, and this was a combo by Alan Asperu-Gudzuk, who's now with us here at the University of Toronto. And here was the hope, at least, right? And so I think this might still be the hope. When quantum computers are able to carry out chemical simulations in a numerically exact way, most likely when we get to fault tolerance with a sufficiently large quantum computer, exact predictions are going to result in molecular design that does not need to be calibrated, right? We can kind of simulate these molecules with computational chemistry, and we can really make the synthesizing portion of R&D a lot more efficient, okay? All right, so very high-level economics here, and I think for those who work in this space, I think you've heard this before. What are the economics to experiment with quantum, right? So first of all is cost reduction. If you're a company that grows organically, right? So you're a pharma company that grows organically, you're going to invest a material amount in R&D to discover new drugs or new materials, right? So for every dollar of revenue, let's say you're spending 15 cents on R&D, maybe we're going to make that R&D more efficient. Maybe it's only going to be 10 cents, and the remainder is going to go to the bottom line. Separately, though, investing in quantum and making R&D more efficient might increase the pace of discovery. So instead of coming up with blockbuster drugs once a decade, you might come up with 2 blockbuster drugs in a decade, right? And so clearly that's good for the firm, right? You'll have a patent, you'll have monopoly power for 20 years. So clearly that's going to help the firm with profitability, but also good for society, particularly in the case of new pharmaceuticals and drugs. But, patients typically have what we call inelastic demand for things that improve their welfare. And so if we can produce more products that improve the welfare of society, then society should be generating more utility. That's at a very high level. Let me go micro again, back to the OTI Lumionics story. And this story, I think, is reflected amongst other companies who, again, are domain experts in quantum adjacent or completely orthogonal disciplines that have experimented with quantum. Okay, so back to the OTI story. Let's just think of cost and benefits, the simplest economics I can think of. So the CEO, Michael Helander, and his R&D team showed up for our quantum boot camp and began experimenting with quantum hardware that we had in the program at the time. Let's think about the costs. So the cost of the team is an opportunity cost, right? He's pulling his R&D team away from other, I don't know, maybe they're working on classical architectures or working with other sorts of technologies. So maybe there's an opportunity cost there, right? Instead of working with those technologies, you're working with quantum. There is a long-term benefit. So as I mentioned, OTI Lumionics is a kind of a domain expert in materials creation in the OLED space. So you can think about, let's see if I can balance this here, I'll put it there. Okay, think about a Venn diagram, okay? So global experts in the materials discovery space for OLED. They had never experimented with quantum, but did so 8 years ago and have continued doing so. And so have become also global experts in quantum and quantum-inspired approaches, right? And so if you put the Venn diagram together, right, they've developed a really novel asset at the intersection, right? They've become kind of global experts in the development of quantum and quantum-inspired approaches to materials discovery for quantum. At such time that we have a fault-tolerant quantum computer at some point in the future, there will be a long-term benefit for this company because they will be quantum ready, right? They've experimented with almost all of the architectures. However, they have also generated a short-term benefit, okay? So when Michael came with his team to start experimenting with quantum hardware, they started working with D-Wave. And so they were able to format their computational chemistry questions into QUBO, all right? So they used the D-Wave as a catalyst to generate quantum-inspired innovations that improve their algorithms that could be run classically today. So they generated a short-term benefit. This is 8 years ago again, that allowed them to make their R&D process more efficient today. And so that sort of outcome has been, I think, reflected for many of our application companies across a number of different domains, right? And so it's interesting, even in this NISQ era that we're in, I think there are even short-term returns to experimenting with quantum, in that you're able to derive some of these quantum-inspired approaches that can be run in classical today. And of course, these companies will be quantum ready. In subsequent years, Michael and his team have written extensively about the use of quantum and quantum-inspired approaches at the intersection of materials discovery in the OLED space, and I think some of their articles have been published in Nature as well. So they've clearly become the vanguard, okay? And as a result of that, this is 2 years ago, this is the CEO, Michael Helander here. They raised about $55 million 2 years ago. And so in part because of a new kind of technique to get rid of the notch on your iPhone. But if you go on to read the rest of this particular article, right, one of the reasons why their strategic investors invested in the company was because of this asset that they built. Right? Again, they've become this global domain expert at the intersection of quantum and quantum-inspired approaches in materials discovery in the OLED space. So it's that intersection, that asset that they've been developing over the years, that was the asset that was the reason why their strategic investors, in part, invested into the company. Right? So investments in quantum, again, have led to kind of 2 short-term bits of value creation, have led to the generation of quantum-inspired approaches that can be applied classically today, and in this case, have led to an asset on the back of which they've generated some venture backing here. Okay, and so along with quantum computers still being economically useful if we don't have an exponential speed up, that will conclude my talk. Happy to chat a little bit after our session. Thank you.